How's it going today, guys? Welcome back to the channel. So in this video today, we're going to be talking about a type of investment that a lot of people utilize for dividend income that's a little bit different than your traditional run-of-the-mill dividend stocks, and that is the category of REITs as well as MLPs. So in this video here, we're going to be covering 11 popular REITs and MLPs that you may be interested in for further research. That being said, guys, I do have to say real quick here that I am not a financial advisor. This is not any sort of financial advice, and you should always do your own due diligence above and beyond this video here, which is for entertainment purposes, before making any buy or sell decisions. So use this as a tool for further research and just as a way to maybe learn about some lesser known stocks that you want to look into further yourself. So just to make sure that you guys are in the right place here, this is what we're going to cover in this video. We're going to talk about why investors choose to invest in a REIT or MLP over or in addition to a dividend stock. We're going to talk about the exact metrics you want to monitor when evaluating REITs or MLPs, as well as the tax strategies that these alternative investments allow for. We're going to look at 11 popular REITs and MLPs for 2021. Crucial steps you should follow when investing, as well as big mistakes to watch out for when investing in MLPs or REITs. So that being said, guys, let's jump right into it here by briefly talking about a REIT versus an MLP versus a dividend stock. And if you guys are already familiar with all of this, there's going to be a table of contents down in the description, so feel free to go ahead and just skip into the part where we start talking about the stocks. So first of all, let's briefly talk about dividend stocks. It's fairly straightforward here, guys, and I have a full 50-minute long video, yes, 50, not 15, 50-minute video all about dividend investing. I'm just going to toss that card up in the corner for your viewing pleasure if you guys want to check that out after. But in a nutshell, large companies are paying out a portion of their earnings to shareholders in the form of dividends. Not every company out there does this, and there's also no obligation or requirement of a set amount of money that they have to pay out. Now, one thing I recommend is looking at the dividend aristocrats, as these are companies that have been paying and growing dividends consecutively for 25 years or more. So it's in their best interest to continue doing that, but just understand there's no law or rule that says this company has to pay a dividend and this is how much they have to pay out. So at any point in time, a dividend could be cut, restructured, or eliminated altogether. So beyond that here, guys, there's not also very many tax benefits with holding dividend stocks other than earning qualified dividends, which is going to fall into those long-term capital gains. Other than that, not really too much to speak of. Moving on, let's discuss quick REITs and MLPs. These have a bit more going on here, and so this is where these may become interesting to an investor. So a REIT is a real estate investment trust. It's a company formed with the sole purpose of owning real estate. It's a publicly traded company, a holding company that owns tons of real estate. Now, they typically have a specialty interest. For example, they might invest in college apartments, shopping malls, or cell towers. However, there's a big difference between dividends or dividend stocks versus REITs, and that is the fact that a REIT is legally required to pay out 90% of its income to the shareholders. So that eliminates that risk of the dividend being eliminated. That is, in fact, a legal requirement. Now, I personally own tons of real estate, and I also have some crowd-funded real estate, so I am not looking for any more exposure to real estate, so I don't personally invest in REITs, but I do think it's valuable just to know, what the actual code is in terms of, being required to pay out those dividends. Now, on the other hand, an MLP is a master limited partnership, and this is a type of business structure. This is simply a cross between a partnership and a corporation. However, it is limited to the natural resources and real estate sectors. However, as we're going to see in a little bit here, one of the LPs that I've personally invested in is involved in the energy sector, but they also have other aspects to their business. So there are some MLPs or LPs out there that aren't solely involved in energy that have other exposure, whereas you can still benefit from the classification of being an MLP or an LP. So with an MLP, you are buying units instead of shares, and it's treated as a pass-through for taxes. So if you are a unit holder, you are entitled to that percentage share of the profits. It's similar to like a profit-sharing business model, so that's why a lot of people like MLPs. Beyond that here, guys, this eliminates the risk of a dividend being unpaid because it's basically profit sharing, so they're required to pay that out. So that's as far into this as we're gonna go here, guys. Just some basic differences between MLPs versus a REIT versus a dividend stock. Now, one thing to note here as well about MLPs is there is a different tax method here associated with this investment. MLP owners typically don't have to pay taxes on their quarterly distributions, and that is because they are treated as a return of capital and it subtracts from your cost basis. That's pretty complicated, guys. We're not going to dive too deeply into it in this video, but just understand there are some tax advantages associated with an MLP that you may not find with a REIT or a traditional dividend stock. Alrighty, guys, so coming in at number 11 on the list is OK Inc., trading under the symbol OKE. This is an MLP that connects supply basis with key market centers. I don't even know what that means, to be honest with you guys, but they are a popular MLP. You really have to be involved in this stuff at quite a deep level to understand, the nuances here of a lot of these very similar businesses. So again, MLPs is not something I would just dive into as a new investor. But again, if you find something interesting, write down the symbol and do some more research on it. Coming in at number 10 on the list here is actually a REIT or real estate investment trust, and this is Equity Lifestyle Properties, symbol ELS. This is a REIT that specializes in trailer parks, resorts, and RV sites. They have 415 properties in highly desirable vacation and retirement locations and 160,000 housing sites. So if that's a particular segment of real estate that interests you, you could get exposure to that through ELS. Number 9 on the list here is another MLP, and this is Kinder Morgan Inc. under the symbol KMI. This is a energy business involved in the transportation of gas and fossil fuels from basins to end consumers. This is also one of the largest MLPs in North America. Number 8 is a REIT that I have discussed on this channel many years ago. I've never personally owned it, but this is American Tower Corporation under the symbol AMT, and this is a very unique REIT, giving you exposure to a type of real estate that ordinarily you probably could never actually get exposure to, and that is telecommunications infrastructure, aka cell towers. American Tower Corporation has a global portfolio of nearly 200,000 towers, 20% of which are in the United States, and nearly half of these are in India, which is a big area to focus on, or a big focus area for them, as India is becoming more online and some of those rural areas are getting cell service. Obviously, guys, with the adoption of 5G, they do have a good trend behind them, so hopefully American Tower Corporation continues to do well with the rollout of 5G towers. Coming in at number 7 is another MLP, and this is MPLX. This is a crude oil pipeline and terminaling station in the Midwest and the Gulf Coast. They also have natural gas operations in the Northeast as a result of an acquisition. So if you are bullish on use of natural gas instead of coal, this is a company that is poised to do well as more people transition off of coal and over to natural gas. However, one of my big concerns overall with MLPs is I'm not a huge fan of the fossil fuel industry because I just don't think it has long-term staying power as, we are adopting green technologies. So that's why I've no stocks in any oil companies. I've never invested in oil. And as I'm going to mention later, the actual LP that I have invested in has energy as part of their business, but they also do something else entirely, which I think is way cooler. Coming in at number 6 is an LP called Energy Transfer LP. This is a natural gas and crude oil transportation transportation and storage company. In terms of an investment and as far as diversification, this is a diversified energy investment, so they hold a lot of different types of fuels. They're actually more so involved in the transportation or movement of fuels, not so much the underlying prices of these commodities. Basically, they're making money by bringing fuel from one place to another, not so much by selling that fuel and making a profit by purchasing it at X dollars and selling it for a bit more. Coming in at number 5 here, guys, is another REIT, and this is Innovative Industrial Properties, Inc., under the symbol IIPR. Now, if you are interested in the green, that's what this company is involved with here. They specialize in the green cultivation and processing facilities. I think you guys know what I mean. I'm trying to not get demonetized here, but definitely an interesting one here in terms of a new and emerging industry. They have long-term leases with growers that provide them with consistent revenue, and the average lease term is 16 years. So this is a REIT in particular that I may be exploring more myself, just to see, if there is any interest here for me. Like I said, I have a lot of real estate already, but this is a very different type of real estate that obviously, I don't have exposure to right now in my portfolio. And I am very interested in the green market, but I'm still just waiting for broader legalization before I may dip my toes back into some green stocks. We'll just see how things pan out here, but I think it's very likely to see myself investing in some of these green stocks or green REITs, later on in 2021, but I will definitely keep you guys posted. Number 4 is another REIT called Digital Realty. This one, very interesting as well. They own data centers for IT, communications, social media, financial services, and more. It is the largest data center operator in the world with 284 facilities across 23 countries on 6 continents. So if you're bullish on big data, this is an interesting way to get some indirect exposure by buying into the actual data centers. Coming in at number 3 is another MLP. This is Enterprise Products Partners, EPD. This is a leading provider of midstream energy services. They're involved in gathering, processing, and transportation of natural gases. Again, with that focus on transportation, they're less affected by the price fluctuations of the underlying commodities. So that is definitely a positive in my book. Coming in at number 2 is another REIT, and this is Americold Realty Trust under the symbol COLD. And this has been one of the best known dividend investments for 2021. This REIT specializes in temperature-controlled warehouses, which are an essential part of the food storage supply chain. So they own over 185 cold storage warehouses across North and South America, as well as Australia. So I personally think that's an interesting thing to look into based on all of the supply chain disruptions. It seems like cold storage, all across the country for storing food seems like a pretty solid investment, but obviously, guys, do your own research above and beyond this video here. And then finally, guys, coming in at number 1 is the only MLP that I personally own. I just added it to my portfolio. That is Global Partners Limited under the symbol GLP. This is a master limited partnership that brands itself as the adaptive distribution energy company. And what they mean by adaptive distribution is highly agile and able to adapt while being vertically integrated. So vertical integration means that they own or do every step of the process in-house. So this company originates, sources, stores, transports, wholesales, and retails fuel, and they also own or lease a ton of convenience stores in the Northeast, one of which that I have visited myself in my area, which is Alltown Fresh. So right now, the most profitable business line is the gasoline distribution, which is 49% of their profits. I like the distribution side of the business because, again, they're getting paid to move the gas from this point to the other. The underlying price of whatever's in the tank doesn't necessarily matter. However, they do sell unbranded fuels, so there is some exposure here to commodities prices. That's the only thing I don't really like about this. However, in the short term, I think fuel prices will continue to rise as people are, going back into the office maybe or going on vacation. But after that, I just personally don't see much of a future for fossil fuels. Now, again, the reason why I liked this company is because they're falling into this classification of an MLP, but they have a very different business. Yes, they're involved in energy, but they're also involved in convenience stores. This is one of the Northeast's largest independent owners, suppliers, and operators of gas stations and convenience stores. So they own and operate nearly 300 convenience stores that they own themselves and operate themselves. This includes their own Alltown and Alltown Fresh brands, which is like 95% of the reason why I bought the stock. I'll say that. Up here in New York, there's this company called Stewart's, which is our biggest convenience store, and I have a very strong feeling that they're going to be a solid competitor to Stewart's in what they've had almost like a monopoly in this Northeast market because there's just not too many competitors. So I think that they have the potential to build out a lot in this area. Beyond that, they also have Extra Mart, Honey Farms, and then Jiffy Mart. But beyond that, they also lease and supply to another 1,200 convenience stores. So they own about 300 and then lease about another 1,200. So there's about 1,500 convenience stores in the Northeast within that portfolio. I also like the fact that in the past, when we had the last lockdown, convenience stores were labeled an essential business. So I view this as a good hedge against another lockdown. Beyond that, they're sitting right now at a PE of around 10, which is just very, very low compared to the S&P 500 average PE, or even compared to the average PE of the energy sector. So personally, I like this stock. That is why I've added it to my portfolio as a long-term investment. So that's going to wrap up the list there. The last thing I want to cover here, guys, is a few mistakes to watch out for when researching REITs and MLPs. Number one, watch out for very small companies that might not be stable enough to maintain their dividend levels. Number two, do not solely look at high yield percentage without looking into the underlying fundamentals. Also, don't turn your nose up to a REIT that has a lower dividend ratio or dividend yield, because it could be that the dividend is low, but the share price is going up very fast. So you have to consider both of those factors. You can't just look at the dividend yield. Also, you should understand the relationship between MLPs and the prices of natural resources. Be very careful because MLPs are either related to real estate or energy. And within the energy industry, there's a lot of fluctuations of commodities prices. And like, for example, it wasn't very long ago that we saw negative oil prices. So that's why I don't invest in oil. And just be careful with how much exposure an MLP has to underlying commodity prices. Distribution is typically okay, but if they're selling gas or any type of natural resource, they're susceptible to fluctuations of the prices of commodities. Beyond that, watch out for investing in a sector that is on the way out or facing significant regulations, which the oil and gas industry absolutely is. So again, just be careful, do your research, and try to minimize, in my opinion, minimize your exposure to the actual oil commodities, energy commodity prices. And then lastly, watch out for businesses that are not adapting to current trends and changes in behavior. But anyways, guys, that's going to wrap up this video. I hope you enjoyed it. If you got any value out of this, please drop a like. If you want to see more like this, go ahead and subscribe and hit that bell for future notifications. Leave me a comment if you own any of these stocks or if you had any feedback on them. I'd love to hear that down in the comments. And as always, I hope to see you guys in the next video.